I want to teach you about how the market really works. And this is probably why you've been struggling for ages at this point. But what we're going to show you today is going to get you on the right side of the stock and exactly what you're going to need in order to be successful when this bull market comes back to town. So, what I want to do is show you my thoughts using Pokemon cards. Now, an unorthodox way to think about trading. But my 13-year-old son, when I was taking him to school this morning, asked about stocks, and he's like, I don't understand stocks, Dad. Like, what even are stocks? And so I was like, listen, it's like your Pokemon cards. And he's like, what do you mean it's like your Pokemon cards? And I said, look, let's say that you have the one Mankey in your deck, right? Let's say you've got a deck of 1,000 cards, and you've got one Mankey, not a monkey, it's a Mankey, right? You've got the one Mankey card in the deck. Now, the Mankey card, to you, it's just another card, whatever. But to all the other kids in middle school, they just learned that Mankey has 50 HP, whatever that means. And it's a scout opponent level, and it has a low kick. And they're like, holy shit, I have been looking for something with a low kick with 50 HP for ages. But you're telling me that this Mankey card is exactly what I need? Okay. Where do I get my hands on that? And let's say you're in middle school and you're like, Mankey cards, I got a couple of those. And they're like, I need that Mankey card. And you're like, what do you mean you need this Mankey card, right? But like, nobody needs this Mankey card, right? And they're like, listen, I need this Mankey card because I need to go and battle my friends and steal all their Poke cards. But I cannot do that unless I have the low kick from the Mankey. And so you're like, I don't know. I mean, I bought this. I got it for Christmas. I didn't even pay for this, right? This card has almost no value to me. I didn't pay anything for it. But to the rest of the middle school, they're like, I must have that card. And so you're getting approached from different kids all over the place, and they're like, dude, I really need that Mankey card. What's it going to cost? Will you take $1 for it? And you're like, no way. I'm not going to take $1 for this Mankey card. Everybody's talking about it, right? And then another kid comes along and he's like, listen, I will give you $2. I'll give you $2 for that Mankey card. And you're like, no way. This Mankey card is so special to me. I got this from Santa Claus for Christmas. There is no possible way that I'm going to give you my Mankey card. And I just thought about that Mankey. That's funny. And then there's a kid who comes around the corner and he's like, listen, here's the deal. I just got my birthday money and I need that Mankey card like no one's business. And you're like, how much is it worth to you? $50. And you're like, oh, whoa. Wait, just one cotton pick a minute here. You're telling me that you want this Mankey card right here for $50. And you're like, okay, sure, I will say this Mankey card, right? So I just sold Mark my Mankey card. Mark was the big baller, right? Mark, here's your Mankey card. Put it in your pocket there. Mark goes home. Mark's stoked because he just got his Mankey card and he's out playing battles. And then he realizes, wait a minute, everybody has a Mankey? This can't, there's no way that everybody has a Mankey card. No way. Oh no, what am I going to do? I just spent $50 on my Mankey card. I just wasted my entire birthday money on a Pokemon card. God, I'm so pissed right now. I can't believe that I spent $50 on this stupid Mankey card. I wonder if I can sell it to someone else. This is how the market works. This is how the market cycle, how every stock out there works. And this is why I tell you, like, you could have 1,000 stocks to choose from, just like you have 1,000 Poke cards to choose from, right? All stocks are bad. All of these Pokemon cards are worthless, right? They're just pieces of paper. But every once in a while, they act right. Sounds familiar, right? All of these are bad, but every once in a while, someone gets a wild hair and they're like, I gotta have a Mankey, or I gotta have a Wingull. I have to have a Wingull, or I have to have a Rowlet, right? And you look at these and you're like, that's kind of like Palantir. That's kind of like SoFi. That's kind of like the stock of the day, right? Name it. Robinhood, GameStop, Nvidia, Apple, Netflix, the Magnificent Seven, right? That's the same thing here because it's just human nature. Whether it's in the middle school cafeteria or if it's in the greatest, most liquid market in the entire world. This is how the market works. So, where I want to go with this is that while you are struggling in the market, it's because you're probably the guy who's spending $50, probably the guy who's like, oh my gosh, I have to have this more than anything, buying at the very top. Whereas the outliers, they're the opposite, right? They're the ones who are picking things up when people are angry. They're the ones who are picking things up when people are starting to get hope, maybe some disbelief or even optimism. And so we do that inside of the Outlier platform. And so this is now a product demo here that I really want to get to, because we just got a buy signal a couple days on the SPY. And this market cycle here should look similar to how greedy and how fearful people get on every stock, right? How greedy and how fearful are people getting? So when a stock is down here at like 28, 29, that's basically people saying, ooh, I have denial, I have panic, I have capitulation. I'm not quite to anger yet, but I have denial, maybe anxiety. And then when it gets way up here, people are thinking at 75, they're like, oh man, this is so easy, right? All I got to do is buy at the top and I'm going to win every Poke game. It's the same concept here. It's the same concept over and over. And let's look at a few stocks that actually have gone through this market cycle, right? Recently, Tesla had a 120% up move from right here to here. Oh, come on. There we go. Even higher than that, 125% up move. 125% up move. And yet there were people who were buying it as it was going up as close to the top as possible, with the belief, the thrill, euphoria, it's going to the moon, right? It's Lambos or food stamps. And then what happened? We got to the other side, and that 120% up move is 100% gone. And they're on this side saying, well, maybe it'll come back, right? It went up before, that has to come back, right? The problem is that we don't know how long this cycle is going to last. And while we saw that up move with Tesla, we don't know if it's going to immediately turn around and go back up. And we can look at a stock like AMD, which has been in a much longer cycle, right? It's the same market cycle. It's the same market cycle that you see right here. But this downward move has taken how long? It peaked in March of 2024 and then had a lower high in July, a lower high in October, and it's just been on a downward slide ever since then. Now, when you start to look at the market through this lens of, okay, it's cyclical, I understand. I need to be getting in when people are getting more greedy and getting out when people have gotten way too greedy. I need to be getting in while there is still fear, because they don't understand how valuable my Shellos card is, because they are still so wrapped up on their Mankey card that they are blinded to see that the Shellos card is where the shit's at right now, right? That's where things are going to. If you have a Shellos card, you're now one of the cool kids, right? Because now you have 3 stars for surf, whatever the hell that means, right? And it has 70 HP. Dude, this is one sick card. Now I understand why everybody's moving over from Mankeys to Shellos. This is where it's at. Same concept, over and over and over and over. So when we go and we look at any stock, we can look at SoFi. We can see right here, SoFi having sell signals before it runs down, having sell signals as you can see it getting less greedy and more fearful before the market is moving down. So you can get out of the way, get in while the market is getting less fearful, more greedy with the buy signal that just came a few days ago. And the same with the sector here. So this is what I'm trying to teach you, is that you want to be getting in when people are fearful, but not when there's blood in the streets, people, right? You've heard the adage of be fearful when others are greedy and greedy when others are fearful. That is an old tripe in the market. Most people think that means buy it on the way down. Buy it on the way down. Let me rephrase that. Most people think buy the Mankey card as it's losing value, as it's gone from $50 all the way back down to 12, 7, 10. That's when you need to be buying. No way, dude. No way. You wait until people have the hope when they're getting less fearful and more greedy. Not when their greed, or I'm sorry, not when their fear is at its absolute highest. No way, because we don't know how far it's going to go down. No way, because we have no idea how far it's going to go down. It can peak at 50 and then just rocket ship back down to 0. Rocket ship right back down to 0. And if that's the case, you have completely missed the plot. And this is why the market works in the way that it does, and probably why you've been struggling. Day after day, week after week, year after year, you're on the wrong side of these moves because you're buying at the top and selling at the bottom and wondering, why does this keep happening? Why does this keep happening? Shellos are da bomb, exactly. And here's a great question. Why is today red? Is there an explanation? I don't know. I don't need to know. In fact, I know that sounds really flippant, but one of the key concepts in this book right here, one of my top 5 trading books, here, Trading in the Zone. One of my top 5 trading books. He talks about the concept of you don't have to know what's happening in the market in order to make money. You don't know, you have no idea what's going to happen next in the market in order to make money. Now, I know that that sounds very impossible because I remember reading that. I remember reading that specifically and being like, you're telling me I don't have to know what's going to happen in the market to make money? How does that make sense? I have to know what's going to happen, District 67. I have to know if the stock's going to go up, right? But just like all these Pokemon cards, right? I don't know which one of these is going to be valuable. I have no idea if any of them are even going to be worth more than 10 cents each, right? But if it is, and I decide to buy it because people are getting more excited about it, I can hold it. I can hold it. I can hold this Roganola. I can hold a Roganella as long as I want to, or I can hold a OVTLYR as long as I want to, as long as the price is going up. And the reason that we don't have to know what's going to happen is because as soon as I buy the Surskit, oh, that's not going to work with the green screen. Hang on. As soon as I buy the Wiglet, the Widget, as soon as I buy the Widget and it goes down, I'm out. Deuces, I'm out of here. I'm out of here. All right. So it doesn't really matter why things happen. All that matters is price. All that matters is price. Let's see. Dude, you're welcome. You're welcome. Bender says, you don't need to know. You can't control what's happening. You can only respond to it. Exactly. So that's what I wanted to go over today. Now, I do want to take a couple minutes to talk about what I see in the market, right? What is the market telling us? Because I think we are so close to be putting on trades, but not quite yet, not quite yet. So the market is telling us by looking at the master key, this is what we need to see. So we're going to start with the S&P 500. We're going to start with the SPY. And what we're looking for is the buy or the sell signal. So we have a buy signal right now. Came through just a couple days ago. The market itself, the index itself is getting less fearful, moving towards greed. The average of the 500 stocks inside of the market is getting less fearful, moving more towards greed. This is what you're looking for right here. So that's a great start. Next, market trend. Let's go to the SPY. And we're really flat on the day. Really flat on the day. As of right now, the 10 is still under the 20. Price is still under the 50. However, mathematically speaking, if we get over 555, it's game on. Game on. Because 555.37 is the 50-day moving average right now. So the outlier trend template, the 10 over the 20, price over the 50, has not quite crossed yet, but it's very close. Very close. We might see the 10-20 cross tomorrow, just mathematically speaking. Unless we get a big move down, this could potentially cross up tomorrow, which is really cool. Next, market breadth. This actually is where I do have concern. Market breadth has me concerned because we just got, I think it was yesterday or Friday or whatever, last couple trading days, I should say. We got a 500 stock move on buy signals. Now, normally you're like 500 stocks got buy signals. Let's freaking go. My concern is we might be moving a little bit quickly. We might be moving a little bit quickly to go from hope to euphoria really fast, right? Really fast. I mean, this kind of looks like that. If you go right here, April 21st, we're about 30% with buy signals. Today, we're at 75%. So within 4 days, going from hope to euphoria on the market breadth gives me concern. Gives me concern because market breadth is actually really cool. It is such a leading indicator. Oh my gosh, is it a leading indicator? And what's cool about this is that the further back we look, we can see these cycles. We can see these cycles. Weird, huh? We can see these cycles up and down, up and down. And then we add in the 10 EMA, and that shows us a bullish and bearish crossover points. Now, I'm okay with trading with it being over 75, but the moment that it turns around and starts coming back down, maybe from 75 to 74, something like that, that's where I get out. I'm looking for my slide. The moment it goes over 75, I'm only going to enter if it continues to go higher. If it turns around, that's when Chris is like, nah, I'm done. I'm done. Don't put on any new trades. That doesn't mean get out of everything, but don't put on any new trades. And if the sectors, which we see these are all bullish as well, all the sectors are bullish right now. If the market and the sector both turn negative, that is a get out of the way. That is a get out of the way card right here. If the sector and market breadth turn negative, close everything. Take your profits, sit in cash until it figures itself out. Now, does that mean it's going to crash? For sure not. It is a very risk-off stance, right? If we no longer are getting buy signals, everybody who's bought is going to do what? If we no longer are getting new buyers, all the buyers that have already bought will turn into sellers. And then that's when you see the market cycle crash back the other direction, right? It's like an elastic band. It's like a rubber band. The further you see the market breadth go, the further you see the fear and greed go, the more likely it is to snap back. Yeah, and like Manny says, get the women and children out of the way. Get the women and children out of the way because we don't know how hard and how fast that this could snap back. Michael, just for you, my friend, I got you. FTNT, let's go. FTNT. And this is how the market wins. Big days followed by pullbacks, head fakes, for sure, right? And that's why we have to line everything up together. It's not one, in fact, let's go to this. It's not the stock on its own, it's everything working together, right? The 40% is a 40% of the move that you're looking for is due to the market. 30% is due to the sector, and only the last 30% is due to the stock itself. So when you align all that together, it just flows. I'm telling you, when everything is clicking together, it is so effortless, right? And this is why most of the time I'm sitting in cash. I'm sitting in cash 6 months out of the year at some points, and I don't stress on it at all because I like to win. I like to win. I like to make money. I don't like to sit there and trade for fun. I don't want to sit there and look for something to do, right? If my money is at risk, I am following that thing with a fine-tooth comb. But when there's nothing to do, I'm not putting my money at risk. No way. I worked hard for that money. I'm not giving any of it back. No way. So looking at FTNT for our friend Michael, we do have that buy signal came just a couple days ago. Let's pop this open here on the 3-month time frame. Right, we got a buy signal that came just a couple days ago, and you can see it's getting less fearful, moving towards greed. Same thing in the tech sector, getting less fearful on average, moving up towards greed. That's what you want to see. And now this is the breadth for the sector. You can see just how quickly it ran up as well, right? Breadth for the sector is at 86%. Michael, if the breadth for this sector is up at 86%, what does that mean? That means 86% of the sector has a buy signal. Sounds awesome. If 86% of the sector has a buy signal, that means all the buyers are there. If all the buyers are there, what are they going to do? Turn into sellers. They're going to turn into sellers. So while I'm not saying it's going to crash back down, what I am saying is that I would be very cautious. Very cautious. But I got you, my dude. Yeah, oversold. You've probably heard the terms overbought, oversold. That's what we're looking for here. That's what we're looking for here. Shane has a weird question, but if you teach us how to trade, how do we develop trading strategies of our own that I would want to switch it up if this question makes sense? Dude, I get it. So I was mentored by 5 of the market wizards, right? It was Larry Height, Mark Minervini, Jack Schwager, Tom Basso, and Jason Shapiro. Interviews are on my YouTube channel. I've had people be like, no, there's no way you did. Nuh. Shut up. Yeah, I did. The receipts are on YouTube. I've been doing this for way longer than you think. Um, the thing is that I learned tons from each of them individually. And Steve Burns has been my biggest mentor by far, author of New Trader, Rich Trader. But that doesn't mean I do everything that they do, right? And so for that regard, if I teach you my style of trading, I want you to take the best aspects of it that work for you and your personality, right? If I'm making a bullish trade, I'm going to explain why I'm making that bullish trade. But you may look at it and you say, for me, that doesn't work. Actually, I wouldn't make that bullish trade, and here's the reasons why. So that's how the market works, right? For every buyer, there's a seller. For every seller, there's a buyer. And so what I do may not work for you, but I am going to give you the very best education I possibly can for free. And some YouTubers charge so much money for what we're about to teach. So much. It's funny. Yeah. Mikey Mike says it right. I'm bored. I guess I'll go see if I can lose a buttload of money in the market today. Right. Investing should not be stressful. Investing should not be scary. Right. Putting your money into the market should feel effortless. It should feel like you walk up to the ATM, put in your PIN number, and then it just spits money back out. If that is how your trading is going, that means you're doing it correctly. Now, I know that sounds like a scammer. I know that sounds like a fake guru thing to say. But when you are trading correctly and you look in your portfolio and everything is green, that means you're doing it right. And the one red ones that come through, the one losers that pop through every once in a while, you just kick them out and you put in something else. And then if it works, you hold that, and then you have a portfolio of winning stocks. And you hold that. You hold that until you get an exit signal. And then you kick them out individually when they get their exit signals. So it doesn't have to be complicated. It doesn't have to be scary. And it certainly is not meant to be exciting. If you're investing and it's exciting, you're doing it wrong. I'll put it that way. So listen, I got to run. I hope that this was useful. It's very, very, very possible that we are starting to trade tomorrow. And in the afternoons is when I put in all my trades, and you are more than welcome to follow along if you choose to. I'm not going to tell you to buy anything. I'm just going to tell you what I'm buying, why I'm buying, and where I'm going to get out if I get out. So I hope that sounds good. Be sure you come back tomorrow. And you know what? YouTube is going to pop up a couple recommended videos right now. I really recommend you watch one. I'll see you tomorrow morning. We'll talk soon.